me just make sure everything's going right. Awesome. Okay. Cool. Well, everybody, as always, we greatly appreciate you coming out, especially on a Saturday night, 5 p.m. I think this is a very good use of your time, but as always, we appreciate your time. We appreciate your attention. Today, me and my amazing colleague, Aliknak, will be going into trading psychology, part 2. Austin, why don't you give us a nice warm welcome?
Yeah, no, and like Logan said, I do appreciate you guys coming out here at 5 p.m. on a Saturday to come join us and learn a little bit about trading psychology, because it's a big side of the market, a big side of trading that not a lot of people acknowledge or kind of look past, and where you are mentally and how you go about navigating this market from yourself and just from a psychological perspective is extremely important. So a lot of the stuff that we're going to be touching on today isn't necessarily completely correlated with like trading per se, right? It's not going to be based on, oh, if it goes over this level, think this way, right? This is going to be stuff to really take a step back, look at yourself, examine what you're doing as a trader, the way you're thinking, and just kind of that general idea. So without further ado, I think we can hop into the first slide here, Logan.
Absolutely. And I really love what you said, because these topics, like you said, they're not specific ways of how to think in certain situations, but the one steady thing in your trading, while the market may be random intraday, day by day, the one consistent factor is yourself. So hopefully today's topics give you a better idea of understanding yourself, understanding how you react to certain things, and then working on it from there if you need to work on it. And we want to start off where we left off last time. If you guys were not aware, a live call number 5 was Trading Psychology Part 1, where we went over things like shaping your mental environment, reacting to loss, revenge trading and cocky trading, greed and traumas, amongst a couple of other really, really great topics, with the last of it making the shift from a scarcity to abundance mindset. And I really do truly think that this is essential. If you are operating out of a place of scarcity, you will sabotage yourself mentally, and it will present itself in your trading results. I really do find this to be true. An example of that is cutting a trade early with no exit signal, or being too scared to take a trade, etc. Moving to abundance, a place of abundance, is the only true way to trade to your full potential. This is because you can think more clearly without any harmful emotions, or being able to quiet those emotions should they arise. And a great example of this is thinking in statistics, looking at your monthly performance instead of your daily performance, allowing trades to play out to their full potential by following your rules without any hesitation. And that's just some things that you can find when you are trading out of a place of abundance rather than scarcity.
Yeah, and just to touch on that, right? So we're starting off with a big one right off the bat here. Trading from a place of abundance instead of scarcity is monumental for being successful in this market, right? Not being afraid to do something, knowing that you are in this market, right? You can't be, you have to dominate the market. You can't be afraid to do stuff. And having this mindset of trading from abundance is very, very important. We are getting some background noise. Sorry about that, man. But yeah, no, wonderful topic to start off with here. So yeah, moving on to the next one, guys. And this is perhaps just as big as trading from a place of abundance, and that is your personal biases, right? So starting off with number 1, we have self-deception, maintaining false beliefs and often denying logical evidence, which limits the ability to learn, right? This could be stuff as cocky trades, being too overconfident, and not wanting to learn new skills or new strategies. Number 2 is the cognitive bias, maintaining false beliefs and often denying logical evidence, which limits the ability to learn, right? Very similar to self-deception. Having confirmation bias, being in an echo chamber is not going to be beneficial to anybody, right? It's not going to be beneficial to yourself. It's not going to be beneficial to anybody who you're involved with, right? So acknowledging these two biases is very, very important. You also have your emotional bias, allowing emotions or one's mood to impact your decision making, right? Loss aversion, we see over here, which is a great example. Not taking trades. You're afraid to lose, right? You're afraid of that emotional impact of losing a trade. Therefore, you're not going to be taking trades. You're going to be afraid to participate in the market. So it's going to hinder you tremendously, right? Emotional biases can go much further than just being afraid to lose. It can be, spread over a multitude of different areas, right? Emotions is a very broad spectrum, and you could definitely see how letting that take control over your trades, over your decision making, can definitely hinder you. And that's not only in trading. That's in every area of life. life, right? Being too emotional can definitely be negative. Obviously, some emotions are okay. You want to be a little bit emotional, but making sure that they're in check is very, very important. Number 4 on here is super, super interesting, and I love that Logan Silver put this in here, which is your social bias, right? And this arises from the influence of other individuals in your decision-making process. I know a lot of you guys are on social media. A lot of you guys probably look up to many people and perhaps admire what they say or enjoy the content that they make. But this is often an area of bias, right? Because you'll often get herded into this area. And as we have here, herding bias, taking random signals from Twitter, or just like kind of seeing somebody on YouTube and going away, like just taking everything they say for what it is, right? Always do your own research. Always try to be an independent person. Think for yourself. Do what works for you. There's nothing wrong with listening to influencers or agreeing with someone's opinion, but make sure that you always have your own research and do your own due diligence on top of what you're reading online, right? Because having these biases in just kind of this mentality of listening to people on the internet or wherever else you go can be definitely damaging. So in all, right, though we did mention some specific biases that we could have in trading or in any area of life, it's really just promoting the general idea of recognizing your flaws, right? Recognizing that these things could be hindering your time in the markets, right? Hindering your trading, and that's never good. So biases is huge. Definitely recognized if you are biased or have some sort of self-deception, cognitive changes, emotional changes, or social influence that could be hurting you. Logan, I don't know if you have any thoughts on this.
Absolutely, and that's the most important thing, and we're going to say this later in this presentation, but the first step towards making positive changes in your trading is identifying if you have biases and which biases you have so that you can consciously work on those, right? And a social negative bias that I always think of when I think of social biases is Mad Money with Jim Cramer, but that's just one funny example of some examples of social influence making an impact on somebody else's decision making.
Yeah, if you could pick, let's say, 1 or 2 out of these 4, do you have any of them that would be more significant in your eyes, or would you say that they're all kind of equal?
That's a great question. I'm not sure if there's any that are more important because I think everyone is different and everyone's going to have different biases just based on their past as a person.
My God.
Sorry, Logan, go ahead.
Continue. No worries. And the mod's in here if you don't mind to serve mute people when they get a little rowdy.
I'm sorry.
No, you're fine.
But if I had to say, I would say social is definitely impactful, especially if you're in a group, just to be aware that, other people can sometimes influence your decision making. Austin, such a great example, I think, is Richard Hart. If you find somebody that has a really good opinion and can pitch their opinion well, sometimes that is a bias in of itself.
Like a manipulator.
Exactly. Yeah. That's absolutely bias. You're being biased by another person. Right. Ben just said don't get cocky, my favorite one. So self-deception and social would be 2 prevalent ones, I'd say. But again, depends on who you are, which ones impact you the most. How about you?
Right. And definitely social and I think emotional. Those are definitely the 2 biggest for me. And I think that, from my time spent here at OBR talking to thousands of individuals learning to trade, those are definitely big. Those are definitely
Absolutely.
huge. And, if we wanted to, we could go on all day and probably make a list of 100 different biases and 100 different, mental hurdles for us to, recognize. But these are definitely the biggest ones. And, if definitely good to take a step back and if you're doing any of these things, recognize it and address it.
Need to recognize it. So now we're going to move into one. Yeah, this is a super fun one. We're going to move into one of my favorite parts actually of this presentation, which is going to result into a little pop quiz momentarily. But we're going to discuss the fast brain versus the slow brain, and this is discussed in the book Thinking Fast and Slow by Daniel Kahneman, if that's how you pronounce it correctly. And it is discussed that there's 2 parts or systems to your brain. And this is super prevalent to us as traders because we need to understand how our thought processes work because it's up to us to make proper decisions very often on a day-to-day basis, right? So system 1 is categorized as the thinking fast part of your brain, and this executes quickly as an impulse. It is your primitive and lizard brain. It is usually biased because it relies on speed and shortcuts. And in this case, speed sacrifices accuracy. On the other hand, we have thinking slow, which is system 2, and that requires much more conscious effort and thought and is less biased, therefore. System 2 is the more rational system, obviously. And from what I've seen And, from talking to a lot of different traders, all great traders utilize System 2. And even if they are acting on their gut, or how some traders say they just have a feeling, even if they act on that, utilizing System 1, they will pause after and analyze it properly with System 2 to still see if it's the best decision. I don't think any great trader is going to just impulsively make a decision and then not consciously think about it afterwards. What do you think, Austin?
Yeah, so this is one of my favorite slides. And this kind of, right, when we looked at the fast brain versus slow brain, or System 1 versus System 2, it's really a battle of quality versus quantity, right? And you do want that happy medium, right? Both of them will serve in your favor, but you always want to calculate, right? You never want to just go off your gut feeling. You always want to have a reason for something, and this is very, very important. That's why Logan says that System 2 is going to be the most beneficial to you, right? Because you're actually calculating and you have reason for what you're doing. It's kind of like, I use this all the time. Sorry if you can't relate. It's kind of like a game of chess, right? I play a lot of chess, and oftentimes when you're playing chess, if you play for long enough, there'll be moves on the board that just seem to make sense, and you don't know why. You're just like, oh, this seems like a logical move. It's my gut feeling. Oftentimes, those are the players that lose. It's the players that calculate and actually know what's going on the board that will end up being victorious, right? And the same ideology, not only does it apply to chess and apply to all different areas of life, but it definitely applies to trading as well, right? Having a gut instinct is fine, but always have a reason for what you're doing and try to be as calculated as possible. So
yes,
very, very important.
I really love that you brought that up, because if there's any one activity that can strengthen your System 2, I really do think it's chess. Chess is a really great way of being very calculated, very aware. You need to be thinking a lot in that game.
Chess is the only thing that I think is like net positive, spending your time doing, other than maybe eating healthy food or working out, right? Like actively getting your brain to work, right, and trying to problem solve is very, very important, especially as you get older. So yeah, chess is huge. Yeah. All right, and then here we have a nice quote from Brent Donnelly, and this is kind of talking about rational thinking versus irrational thinking. Or rational versus impulsive thinking. So I'm just going to read the quote here. Rational thinkers understand probability. They understand statistics. Irrational thinkers overestimate the chance of low probability events and underestimate the likelihood of high probability events. Irrational thinkers are often fooled by randomness. Okay. So maybe if you may understand that quote, you may not. And Logan, we can definitely talk about and expand on this slide a little bit. But pretty much what this comes down to is try to be as rational as possible, right? And I'm guilty of this with myself, right? I have fears. If you guys don't know, maybe you do know. I talk about it with Logan all the time, and they're always giving me a hard time. But I hate airplanes, right? I absolutely cannot stand flying. I do not like airplanes. I've been in flying before, right? It's just not my thing. I try to avoid it at all costs. Is it really rational for me to be afraid of airplanes? Well, no. Actually, the flying is one of the safest methods of transportation that you can do. Driving a car is actually significantly more dangerous and kills many, many more people a year than flying, right? So having a very rational perspective on life is important, because it's going to allow you to do more things and to be, more ambitious in what you do. Logan, do you have any thoughts on that? I know I made kind of a weird comparison there, but I guess the same idea applies.
Yeah, I think that's a great comparison, because, even just reading through this, irrational thinkers, and this is not a dig at Austin by any means. This is just a rational.
It's all right if it is, man.
But irrational thinkers overestimate the chance of low probability events. Austin overestimating the chance of him in a plane crash or whatever the situation may be, and underestimate the likelihood of high probability events. Him having a completely fine experience, just like most flights go. And irrational thinkers are often fooled by randomness, which we see a lot in trading. Like, let's say somebody is on a 3-trade win streak, and sometimes you can do that just by complete random. Him saying that he's a consistently profitable trader just after 3 profitable trades, just after a small win streak, that is irrational thinking. That's completely being fooled by randomness.
Right. Because even in a perfect strategy, in a perfect world, there's going to be strings of random things. It's like going on roulette. In reality, out of the course of the day, you're going to see like black and red multiple times, but there's going to be strings of like 10 reds in a row, right? Just like how when you're trading, though your strategy is remaining the same, you might lose 5 times in a row, right? But that's just completely random in your strategy and in probability, right? So be rational, understand that, and recognize that, and stick with your strategy, right? As long as it's working. It's good to take a step back and see how your performance is doing on a grander scale, not just 3 trades like Logan said, right? So, yep.
Awesome. So, do you want to finish the rest of the slide?
Oh yes, okay, yeah, and this is the best part, right? How could I miss this? So we're gonna do 3 quick question quizzes, little riddles, I guess you could call them, and everyone can read them, and you don't have to answer them out loud, just kind of answer them to yourself, and me and Logan will discuss them. But there's some pretty interesting riddles, and they test your brain in the way you're thinking, and it definitely can be a little bit of an eye opener for the way that your brain works. So Logan, you want to go over to the next slide here?
Absolutely. And just so everybody knows, this is an actual test. We didn't just think of this ourselves. This is known as the cognitive reflection test. So we're going to leave you guys to just think about this for a minute after we read these questions. Just 3 questions. Question number 1. If it takes 5 machines 5 minutes to make 5 widgets, and I want everybody to answer this, how long would it take 100 machines to make 100 widgets? And if you saw this in chat the other day, if you were one of those people, please do not write it out. I want everybody to think about this.
Doesn't apply to you.
And question 2, a bat and a ball cost $1.10 in total. The bat costs $1 more than the ball, and how much does the ball cost? Question number 3. In a lake, there is a patch of lily pads. Every day, the patch doubles in size. If it takes 48 days for the patch to cover the entire lake, how long would it take for the patch to cover half of the lake? And again, we're just going to give you guys like 30 seconds.
Yeah, yep. And while we give them that time to think, one of these questions is exceptionally hard.
Yeah.
And I got 2 of them, but the other one I still for some reason still can't wrap my head around how the answer is what it is. But I guess that's a flaw I have in my way of thinking.
We're gonna get into it.
All right, sweet.
Zombie demo. No cheating. Awesome. Okay, I think we can move forward.
All right, I think we're good. Going to the next. There we go. There's the answers. Okay, Logan, do you want to go talk? I mean, we can both run through these answers if you'd like. So I guess I'll go over number 1. So the answer is 5 minutes. Each machine makes 1 widget every 5 minutes, right? I know that may not sound right, but in fact the answer is 5 minutes. If 5 machines take 5 minutes to make, if the 5 machines take 5 minutes to make 5 widgets, then 100 machines would take, what is it, 100?
So the key to this one, and what I learned is, we're going to reread the question.
Right.
If it takes 5 machines 5 minutes to make 5 widgets, the answer to this one is really reading the question properly. Each machine is taking 5 minutes to make 1 widget. So how long would it take 100 machines to make 100 widgets? Right,
and it's all relative. Correct. Yeah.
All right.
And that's definitely a twister, right? I couldn't even explain the answer properly, so yeah. Though I did get the question correct. Yeah, Logan, do you want to? This one's also very, very tough. But
sure. So let's reread the question one more time.
Sure.
A bat and a ball cost $1.10 in total. The bat costs $1 more than the ball. How much does the ball cost? So let's say the ball costs X. Then the bat costs $1 more. So it would therefore be X plus 1. We then have bat plus ball equals X plus, in parentheses, X plus 1. Does utilize some PEMDAS skills, so hopefully everybody here was in at least college algebra. Equals 1.1. Because together they cost $1.10. This means 2x plus 1 equals 1.1. And then 2x equals 0.1. So x equals 0.05. This means the ball costs 5 cents and the bat costs $1.05. This was the one that tricked up Austin and myself. I can't lie.
Right, and what does this question kind of expose? Well, I mean, if you read the question the first time around, your first instinct, right, is to be like, oh, the bat's $1 and then the ball's 10 cents, right? But in fact, that's just you not actually calculating the problem in your head, right? You're kind of going with your gut instinct and not actually processing what the question is asking you on an actual, like, numerical scale, right? So it's very tough. And what's that?
That's a good way of putting it.
Right, exactly. So tough question, but it kind of exposes the flaw of just kind of going with your instinct and not calculating.
And this one's personally my favorite. And we'll just reread it again. In a lake, there is a patch of lily pads. Every day, the patch doubles in size. If it takes 48 days for the patch to cover the entire lake, how long would it take for the patch to cover half of the lake? And the answer to this one is 47 days. Every day forward, the patch doubles in size. So if it took up to 47, that would mean that, think about this, say 48, every day it doubles. It's literally just dividing it, or minusing by 1 because it doubles that next day, right? So 47 days, the next day it doubles, then we're at 48.
Exponential. Yep.
Half, yes.
Yep. And in my opinion, that was the easiest one.
Yeah, I do agree with that.
That might be the easiest one. But yeah, very, very interesting. Those are some fun little tests that you can always give yourself to, see where you're at with your cognitive abilities. But it's very important to do stuff like this, especially, when we're talking about something like trading psychology, right? Examining your cognitive abilities and kind of knowing where you are, right, in your thought process. So.
Absolutely. Yeah, and the thing that is really interesting to me about this is in a survey of 3,428 people, 33% of them missed all 3 questions. Most people, 83% of people, missed at least one. And out of MIT students, very educated people, we'll use that sample, only 48% were able to answer all of the questions correctly. So we did not, ask you these questions to call you stupid if you answer them wrong, by any means. But rather, where to look if you did act more with your System 1, that impulsive brain, not really analyzing the question too deep, rather than utilizing System 2, taking a second to break down the question. What is the question asking? Looking at the details, because the first and third question are completely up to just the details in the question itself, right? The wording of the question. And then in question 2, obviously, you have to mathematically go about it rather than just, guessing off the bat.
Very good, very good. And then we have another little test for you here, another little mind game for you. Logan, do you want to go on this?
Yeah, this is actually we'll not say the name yet, but I would just like everybody to take a guess if they think that these lines are the same or if one is shorter and if one is longer. And this is actually a very popular illusion. And these lines, if you put 2 lines on each side or 2 pieces of paper, you'll realize that it's actually the same length. It's just that the arrows on the end are flipped outwards, so it makes it perceive like the line is longer. So it's very, very interesting to see. Like me personally, I guessed that they were the same. Austin, you said that you did not guess that?
Well, I knew that it was like an illusion, so I assumed that they were the same. But initially, looking at it, I was like, oh, okay, the top one's shorter. But obviously, after further examination,
that was your System 1 brain sneaking in.
Right. And Logan, I don't know if you can, if you flip back and forth between showing the lines and not showing the lines. I don't know if you can. Yep. So they are, in fact, the same length.
The same length. Yep, it's very interesting. If you just take that extra second to break it down. Because one would say, rationally, if we just look at this impulsively, the bottom line is perhaps longer.
Absolutely.
And Zombie Demo brings up a great point. By using trend lines, you can tell they are the same. Absolutely.
Right. All right, and this is my favorite slide. This is number 1 for me. Shooters gotta shoot, man. You gotta have that mentality, right? Like, go look at any successful person in life. They didn't do it without taking a chance, without taking risk, putting themselves out there, right? This is something that we've been saying to each other a lot lately, right? Especially me and Logan. If you're not taking trades that fit your criteria due to the biases we just discussed earlier, you are not reaching your full trading sample size and your full potential in the market, right? So you're already just kind of putting yourself in a bad situation. So always be ready. Don't be afraid of the market. Trade from an area of abundance. Recognize your cognitive bias and always be, try to be in a System 2 way of thinking where everything you do is as calculated as possible. And with that, once you get your strategy down, you got to shoot. Because if you don't shoot, you miss 100% of the shots you don't take. That's a fact.
Absolutely.
That is a fact, and that applies with everything, not just trading, right? Everything. If you see, right, this applies to my men in here. If you see a cute girl, right, and you don't talk to her, you're never ever gonna have a chance at ever, having a relationship with her, right? You need to at least try, introduce yourself, and if it doesn't work, it doesn't work. You move on.
Shoot your shot,
right?
man.
Shoot your shot. So shooters gotta shoot.
Absolutely. And, I always like to bring in statistics when we're talking about trading psychology because it's the thing that's always helped me the most, just looking at the numbers. When you're looking at statistics and you're talking about the shooter's got to shoot mentality, if you're sitting out of trades, even though they fit your criteria, just because of, thinking about that loss aversion bias we were talking about earlier, you're therefore, you might miss a really great trade just because you're sitting out due to biases. But if you shoot your shot because it fits your criteria, then you will realize and see all of those really great winning trades that you would have otherwise been sitting out of. So if you see an opportunity and it fits your criteria, you use your System 2 brain to analyze it. It makes sense. It applies to all of your rules. There's no reason that you should be sitting out of that trade. Unless, the VIX is at 50 and we're getting crushed. But in that case, maybe you push harder. I don't know. But either way, shooters got to shoot.
Yep. Yeah, I mean that's really the cut and dry idea of it. So, is that all we have?
No, we have more. We have more. So,
what did we learn?
What did we learn? We first went over shifting to a place of abundance mentally, and that will supercharge your trading results and remove self-sabotage. Identifying your biases is the first step to working to remove them. You must utilize your System 2 brain to trade more effectively and make better decisions within your trading. And you must be taking trades. Getting involved in the market is the best way to learn if and what you are doing wrong, but also to see the full expectancy, and when I say full expectancy, I mean win rate, the full win rate of your system. Any other takeaways for you, Austin, that we didn't touch on?
No, that's all, man. That's wonderful. I think a lot of these things can be applied to really give you a step up mentally in the game, right? Because if you're not acknowledging these things, then you're really going to be at a disadvantage in the market. So, and in life in general,
Yeah, these are overall good tips, I would say.
Yep. And if you guys really want to, go ahead, Logan. I'm sorry.
No, finish your thought.
I was going to say, if you guys really, if you guys want to go and you might be wondering, well, I understand all this stuff on a cognitive level and on a mental level, psychological level. How do I actually go in and start, applying this stuff to be successful in the market? Well, that's where I'll point you to our 13, 14 other live calls that we've done talking about indicators, trading strategies, all of the above. I definitely encourage you guys to go check those out. I know we just really honed in on trading psychology and the mental side of things today, but there is a plethora of really, really good information on our website, on our YouTube, and within the Discord server. So I really recommend you guys and encourage you guys to go use those resources as, they are free to you as a OBR member. So,
Yes. Absolutely. If you've not checked out Trading Psychology Part 1, that's live call number 5, highly recommend it.
And that's that trading psychology is more catered to actual psychology in the market, right? Not within yourself. Right.
Right. And Austin, while we're on that subject, I wanted to talk about, applicable things that you can do once you, for example, identify a bias that you want to work on. I know you work on your level 2, your System 2 brain by playing chess. That's one really good example. Reading is another good example. But when you identify your biases, and I'm going to answer this question as well, but I want to hear your response. If you did have a bias, thus you say you came across, what would you do to work on that, to get rid of that?
Just go at it head on, right? I mean, the moment you recognize that you have some sort of flaw, whether that be like, let's say you're afraid to take trades or you're intimidated by the market, right? Like, first thing I would do is I'm waking up and I'm saying, hey, I own this market, right? And everything that I see that fits my analysis and fits my strategy, I'm taking this, So yeah, that's what I would do. Go head on at it and just take it over.
Yeah. You briefly mentioned what I would refer to as affirmations, trying to tell yourself,
Right.
Let's say you identify that you have a fear in the market. Let's just say you're acting in fear, right? You could affirm to yourself, I am not making decisions in fear. I am not making decisions in fear. Another thing that I would say is meditation. Meditation and journaling have always been really big for me. I can sit down and really think apart, why am I making these decisions based on this bias? How can I move against that? Yeah, go ahead.
Yeah, like outside stuff, like other things to improve. Yeah, so chess for me is a huge one for sure. Yeah.
So those are just some ideas. Affirmations, meditation. Highly recommend journaling. Definitely I think everybody should be journaling. If you're not, just at least one time, try it out.
Any kind of mental exercise that you can do is going to be very, very beneficial.
Yeah. And just to wrap it up all together and actually touch a little bit more on that part, Austin, Tell us about consciousness.
Yeah. So all the things that we learned today are to bring us to the one main goal: bringing more consciousness to your trading, right? Understanding what's going on and what you're actually doing in the market. And we see here that don't treat your trading like a business, or do treat your trading like a business as it is the absolute truth, right? Show up with intense focus, awareness, consciousness, and overall be very serious when you're trading, right? You're playing with your own capital, you're playing with your money, and you don't want to lose that. So you want to set yourself up as good as possible for success. And the best way to do that is by building a strategy, knowing where you stand psychologically, and going from there. So, yeah.
Absolutely. Love that. Bringing consciousness is definitely a really good answer to a lot of the problems that people face. It's just from a lack of awareness.
Being aware.
Yeah.
It's like being aware. Yeah.
And sure. Bringing that intense focus, that awareness, and that consciousness every single day, and your success is just a matter of time. So
yeah, everybody in here can be successful, right?
Absolutely.
You don't have to be smart to be a successful trader or to be a successful businessman. It's about being consistent and persistent in what you want to do, and you will get there, right? Everybody here is worthy, and this is a Logan Silver quote, worthy and able and capable of accumulating large amounts of wealth. So I just want everyone to know that, and if you think that you're not capable of doing so, you are very much wrong. So
that's a bias that you should work on.
That is definitely a bias. Yep.
Cool. Well, now we're going to move into questions, and thank you for joining.
Yeah. And you guys are more than welcome now to use your mics or talk in live chat VC Mute. But of course, if you don't have any questions,
pero al igual, eso no tiene plazo de pagarlo hasta hoy.
I'm sorry, I'm not sure you understand that question.
Por eso, pero es que de todos modos tienes el plazo de pagarlo hasta hoy.
I don't know. Yeah, maybe he was asking a question in Spanish. Unfortunately, guys, I am not bilingual. I don't know if Logan, are you bilingual? You don't know Spanish.
I'm not, but I did take 5 years of Spanish, so I wish I was.
Yeah, Alex, and you put chess.com there. I also check out Lee Chess as well. Lee Chess is a very good chess website. Definitely recommend it.
So I love this question. I saw it earlier.
Yes.
What would you say to a trader that exits too early because they get scared? Go ahead.
Well, I would say that you have to have a strategy, right? And you have to have a clearly defined risk level for your trade. So whether that be a stop loss or whether that be a line that you're making a trade off of, right? Let's say there's a support line and you're going long at that support line. There's no reason to cut the trade until we break said support line, right? A clearly defined risk level. So you should never be scared or super confident in any trade you do. It's all about being calculated and having a plan, right? That's one of the biases we just talked about, right? The word getting scared, right? That's an emotion, fear. And when you let that emotion overtake you, it will make it so you miss out on a lot of really good opportunities. So always have a plan, always have a strategy, and know what you want out of a trade, right? It's always good to have that in place.
Definitely. Absolutely. The number one thing I would say is having a stop loss. That's going to be the obviously most important thing. And once you have that stop loss, I think it's really important if you're still facing, that you get scared, you're in trade. I would say that if you have a stop level, you should perhaps walk away in complete honesty. Set your alerts and walk away. If you are going to be a detriment to yourself because you are too scared at the desk and you may make a wrong decision just based on an emotional impulse, you should walk away from your desk and remove yourself from that environment. That's something that I used to do a long time ago. I would have a strategy where I would just, find my entry, set my stop loss, set my take profit, and walk away. And that totally has worked. So if you are exiting because you're too scared, find a stop loss, have a predefined risk level, and follow your rules, I would say. And once you do that and you're still scared, that's when you have a bias of some kind or something that is underlying issue that you should start to work on by bringing your consciousness to it, right? Bringing more awareness to it as a problem and then working actively to solve that problem, whether that is through journaling, whether that is through, affirmations, whatever it may be through. But the first step is having a stop level.
Absolutely. And it's okay if that stop level gets hit. You should be happy that your stop loss, of course you lost the trade, but it's like stop loss exists for a reason. Okay, you're out of the trade. Let's move on to the next one.
Yeah.
Right. The stop loss exists for a reason. You're gonna use it at some point, right? So don't be upset when you do use it, because that's literally part of your strategy. Without that stop loss, you wouldn't be successful in the market.
Absolutely.
You wouldn't be able to afford the risk of every trade that you take on. The only reason you can afford that risk is because of a stop loss.
Yes.
Right. And it doesn't matter. I see somebody just asked, what about trail stops? that trail stops are fine too. Whatever you have to do, right? You need to have a level in which where the trade is invalidated.
And you get out without any hesitation because that is following your rules. You
Right.
need to respect your stops if you have them. Hard stops are a really great way of doing that if you have an issue with that.
Yeah.
Yes, Snowflake, we
I
are
typically
streaming
have
right now.
I typically have a hard stop.
Yeah.
Because I like to get out of the losers as soon as possible.
Absolutely. I get scared a lot in my trades. My habit that I found is either making little notes somewhere, talk about what I'm doing, or I'll step away and do push-ups. Both of those are
that's
awesome.
Great.
Both of those are awesome. What's the best plan to rebuild an account? Started with 2K, went up to 3.2, and I'm currently sitting at $200. Awesome. Would you like to answer that first?
Yeah. So you might not like this answer, but I'm just trying to be as transparent and honest with you as possible, and I'm telling you my honest opinion. $200 is going to be almost impossible to grow in a market like this because every single trade that you're taking, you're going to be using 100% or 90% of your entire portfolio. Obviously, you can try to build it, but you might find out that you're going to be unsuccessful very, very quickly. When people are in this situation and they're working with a very small amount of capital, we usually tell them, or just a friendly suggestion, right? We're not financial advisors, but to go work a job of some kind, right? Find some sort of source, a stream of income, build up some capital, paper trade, right? Participate in the market still, practice your strategy with a paper trading account, and then once you have a considerable amount of capital to work with, such as $3,000 to $5,000. Some people would even consider that too low, but $3,000 to $5,000 I think is okay. Once you get that back, then you could come back with your good, renewed, ready-to-go strategy that you've been practicing in paper trading, and you can start applying in the markets again. $200, unfortunately, is going to be, for most people, a lost cause. So,
yes. Looking at this realistically, Chris, you have two options right now, right? You can either decide that you're going to gamble that $200 and risk losing that as well, or you can take a step back and start to implement more positive behaviors, because there's no doubt, just due from what you're saying, that you are not using proper risk management. So I think a really good idea would be, like Austin said, to take a step back, try to reanalyze what went wrong during that time period, implement some new risk management rules, and take a swing when you have more capital to risk, and you can go in at a more educated and calculated approach rather than trying to gamble that $200 back up to where it was. Austin, you there?
my apologies. I was talking while I was muted. That's my bad. I see that somebody said, what about $1,000? $1,000 is very much possible. We actually just had an analyst, our analyst Andy, turn $1,000 into a very, very large sum of money in about 48 days. So it's definitely possible, but you have to be definitely a skilled trader to do so.
For sure. You need to be skilled. For me, small accounts maybe trade with more emotion because I didn't want to lose that account. Yeah, I think that's down to you as a person.
Trading from scarcity, too.
Yeah, that's definitely trading from scarcity, for sure. And, Ben just said that. Literally and metaphorically, trading out of scarcity is tough. Is there a way to paper trade without delay quotes? Without, No, I don't think so. I think you need to trade with, at least with Thinkorswim.
You're like 15 minutes delayed from the
market.
At
least on Thinkorswim it is.
Yeah. And if you want to avoid that, just don't pay attention to what's right. Only pay attention to to what you have, so you can actually, not know what already happened. Because if you know what's happening, then paper trading isn't going to get you anywhere. Oh, okay. We have Life as a Journey says there is. Yeah, perhaps there is. I honestly don't know the ins and outs of paper trading and what services they offer and how they go about it. But if you can get real-time quotes, then that's going to help you. Yeah. When do you guys personally like to start taking profits or stopping out of a trade? Yep. So every trade is different. It all depends on the technical analysis, right, or fundamental analysis, whatever kind of aligns with your original trade idea. Logan, do you want to touch on that?
Yeah. We talk about this a lot. Taking profits. Every different setup that you have is going to have a different profit-taking plan. So that's going to depend on you. But, something that me and Austin like to do is, 20 to 30% of a contract value, especially in a day trade, is really great. Especially in this market. I don't think we should be trying to, swing for 100% gainers every single trade here. So that's just something you can. What's up?
Yeah, I'm even taking 10 to 20% in this market, right? Just being consistent.
So that's one way you can take profits. Another way is you can wait fully until a take profit is hit based on your entry. And then stopping out of a trade, we say this all the time, but waiting until that trade idea is completely invalidated, whatever your setup was. If it was a head and shoulders, when price breaks back above that right shoulder, it's invalidated. Whether it's a momentum trade, whatever it is, when your trade idea is invalidated is when you are stopping out of the trade. That's the ideal position to get out. And you could scale out before then if you see the trades going against you as well. But a hard stop definitely when the trade idea is invalidated.
Right, and a great example of this, Logan. Right, I recently took a SPY put Friday, and it did not go my way in the first few minutes of the call. But I had a very clearly defined risk level in which I said, okay, as long as price remains below here, I will remain in this trade. And that's huge, right? Having a clearly defined risk level, both for take profits and for being stopped out, right? Where you should have your stop loss.
Yes. And we are getting a little bit off topic. It'd be cool if we could keep the questions perhaps, closer to trading psychology.
Right. Yes. Oh, that's not a bad question. So getting into trading, it can get quite overwhelming with all the info, strategies, indicators, etc. How do you guys deal with that from a psychological standpoint when you first started? So how do you kind of avoid getting this feeling
question.
This feeling as a new trader? How do you avoid the feeling of being overwhelmed in this vast world of trading and everything that's kind of going on? Well, I mean, there's a few ways. That's just start by doing your due diligence, kind of getting an idea of how stuff works, spending time in the market, right? Having experience in the market and understanding how the market moves. And in reality, right, you're going to be overwhelmed a little bit, and there's really no way to get around that, just like with anything you do. If you just start working out, you're going to go to the gym, and you're going to see people who are like bodybuilders, and they're going to be using machines you don't know how to use. They're going to be doing workouts you can't do, and it's going to be a little overwhelming. Or when you go and play a sport for the first time, right, it might be a little overwhelming. Or if you go to an amusement park for the first time, it might be a little overwhelming. Eventually, you will get over it and you will adjust, but it's just kind of, unfortunately, that's what you kind of have to go through, and you have to be strong and get up on over that. Logan, do you have any thoughts on being overwhelmed?
Yeah, I mean, think about it like a video game. You can sometimes go into a video game. There's a whole bunch of things you could do. There's a whole bunch of buttons you can press, but what do? You follow the tutorial. So what I would recommend is finding people that you can trust, a reputable source, whoever it is, and follow what they're teaching you. And once you have a really good idea of what's going on with them or what they're doing, and if that works for you or if it doesn't, then you can move on. But trying to go at everything at once is going to lead to frustration and no progress whatsoever. So try to focus on one group, one reputable source, whatever it may be. Learn something, see if you like it, and then at that point you can move on. If you do, stick with it. If you don't, keep learning, whatever it is. But yeah, don't spread yourself too thin.
Absolutely not. Spreading yourself too thin is not a good thing at all, right? Start with something, stay focused on it. Don't master it, but have a good idea how it works. Move on, learn the next thing.
Yeah.
Do you guys have a daily goal? And if the goal is met, do you walk away or just keep on going? I guess that's a psychological question. Logan, do you want to answer and then I can answer, or I can just answer? It doesn't really matter.
Yeah, in the past I've had daily goals. I've removed them just because I came to the conclusion that sometimes when the market is moving your direction, that means you actually have to push your foot down farther rather than take it off the gas. So if I hit a daily goal but I see the market is moving, I'm going to push into my edge. I'm going to lean into my edge because you can make a lot more money that day than you ever thought you could. Just because you're not, you don't have a daily goal. But a daily goal is a really great thing, especially for beginners. And if you're a beginner using a daily goal, once that is met, I recommend walking away, because if you don't walk away, then I don't know what the point of having a daily goal is.
Right. Yeah. So for daily goals are fine, but they can also hinder you and limit you, especially if you're doing quite well and you're in the same, if you found your rhythm in the market, there's no reason to keep on to stop, right? Keep on going, squeeze everything you can get out of it, and obviously if you're deep in the green, make sure you stay in the green. So yeah.
I found the SPY is most profitable for me, and every time I try and play something else, I just blow my account up, LOL. Possibly stay trading SPY. Me and Austin love trading SPY. A lot of the analysts here love trading SPY. You can, Clayton says this all the time, you can make a full-time living just trading SPY. So if you trade SPY really well, just focus on SPY. Once you master that and you're balling, then you can go try other things. But I think that if you're really good at SPY, you should just trade SPY.
Yep, no reason to trade random stocks when you don't need to. If you're good at one thing, like I know people who just trade AMD. Like, all right, trade AMD. You know, whatever works.
Whatever works for you. Birdie is a killer at Shopify. I would never tell Birdie to stop trading Spotify because he loves trading it and he does really well. So, you know, if you're really good at trading SPY, stick with it.
Right. And it's like, it's anything else in life. Like if you're doing well at something and you see consistent growth, but it might be boring, right? I mean, just stick with it, right? You're doing well and that's what matters. But obviously you got to be happy. Right? Happiness is important. So if you don't like trading SPY and it makes you unhappy and you're bored, then maybe switch stuff up. But yeah.
But if you're killing it, I doubt you'll be unhappy.
Right. Precisely. But yeah, guys, that was a good time. Logan, what time is it here? It is 5:48. Wow, that's a pretty good time. Pretty good timing. So we will give it a few more minutes here for any questions that you guys, last minute questions that you guys have. And if you guys are asking questions anywhere else, whether that be DMs in stock chat, general chat, free chat, they will go unheard, right? If you want to ask a question in regards to this live call, you must ask it in live chat VC mute or just speak up with your voice. Anywhere else, it might be hard to reach us for right now.
Birdie, it's good that you identified that you have that cocky mentality of Shopify, but the matter of the fact is you are really good at it. So don't get cocky, but understand that you have an edge. Continue to lean into that edge, but still don't just flip a switch and get too cocky where you're only utilizing System 1 and thinking too fast, but make sure you're also utilizing System 2, rationally going over your trades because you are good at it. So I wouldn't say just, stop doing it, but, you can definitely have a good mix there. I think you'll do pretty well.
Absolutely. I do see several people are typing right now, so we will give it a few more minutes.
Also looking forward to Monday with you, Shift.
Monday will be fun.
I've learned that I need to step away from earnings and plays like that. Yeah, me and Austin almost never play earnings. I played 2 earnings in my life, and one of them happened to work out. But it's completely coin flip, complete gamble. Take your money to the casino.
You get better odds at the casino.
Yep, like Austin says. Take your money to the casino.
Yep.
That bot's all about me right there. That Magic 8 Ball, they made it just for me now.
/dgen. Love it. And guys, we always shit on gambling and we always shit on the idea of being risky and we want to be calculated. But, if sometimes in a strategy, it's okay to play with profits, right? Don't just because something seems uncertain doesn't mean you shouldn't dabble around in it a little bit. Oftentimes, I will take very risky plays at the end of the day with profits that I've made, right? And that's just me being aggressive in the market. There's nothing wrong with that, right? So though sometimes you might be feeling like a degenerate gambler in the market, as long as you're sticking to your strategy and you're understanding what you're doing, it's honestly not that bad. So just be aware of what you're doing. So if you choose to play in earnings, it's not bad, but understand that your chance of success is like 30 to 40%.
Birdie, quickly tell everybody your win rate on earnings, please.
Well, we are a grand total now for 4 for 22.
Yeah, see guys, that's not good odds. Nobody wants those odds.
Yeah, those are pretty bad.
You're better off going to a roulette table. Am I wrong?
No. Nope.
Well, first you got to send me the invite first, right?
Right. Well, first we have to show up at the casino. But yeah.
And
but
yes,
I
Ben,
would highly
my
recommend
vote is
not
for
playing
Leo poker nights.
I want to add chess nights.
Chess nights, I'm down.
Give all you guys
chess
work.
Championship nights.
Yeah.
Awesome,
Logan's seen me rock on the board. Logan's seen it.
I've been a victim of it a couple of times.
So yeah, guys, any questions that aren't pertained to psychology, we're probably going to avoid. Those are still great questions that we can definitely touch on, as the week starts.
Day in the live call.
Right, any day in the live call, correct.
I do have a question for both of you from a mentality standpoint.
Sure.
All right.
Sure.
So when you guys wake up or whatever time you guys wake up, all right, what is your preparation for that day to get you ready to trade?
That's a really great question.
That's a good question. So obviously this question is like it's going to be unique and different for every person. But I guess this is a personal question for like depending on what you do. So Logan definitely has a more intense pregame ritual than I do. Logan wakes up very, very early in the morning. Logan, do you want to talk about what you do?
I love that you call it a pregame ritual.
Yeah.
Yeah, sure. I wake up pretty early. I always get.
What time do you wake up?
4:30. I backed it up a couple of minutes, so it's 4:30 now. At that time, I am also waking up to trade the Forex session, just so everybody has some context here. But that's EST. After that, I always, every single day, get my guided meditation done. I have this app called Waking Up by Sam Harris, and it's awesome. I love it. But always get one of those in, and usually I get a workout in every single day before I trade. I like to sweat in some way. There's a lot of studies that say your brain works a lot better after you get some movement in, so I always like to do that. And then if I have time, breakfast. But that's the ritual right there.
Yeah. Me, I wake up. I pet my dog. I get happy to see my dog. I sit down. I usually get a very large drink, like a beverage, to stay hydrated. Usually a water, or an orange juice.
Some days he spills it on himself.
What's that?
Some day you spill it on yourself.
No, that was the coffee. Not the water and the orange juice. No spills with those. And I am typically caffeinated. I do enjoy my coffee. But yeah, I'm much more easygoing. I kind of just do my thing. I typically try to get a little food in me and sit down, and I really just lock in. I get everything. What I do like to do is I like to make sure I have my all my tabs in order. So I do trade on one monitor, and I like to make sure I have all my stock charts that I'm going to be looking at. I have my options flow ready to go. I have my stock market heat map up. I have any fundamental news that I could be getting from Twitter ready to go. Like I'm watching Twitter very, very closely. I'm always talking in the live chats, right? As long as everything's in order, I usually am pretty good to go. But yeah, I mean, if you are an animal like Logan, I don't wake up at 4:30. I usually wake up around 7:30, 8 o'clock. I'm much more human. Logan's a lizard. Yeah, so I don't know. I that's what I do. Nothing too crazy. But there are times where you do have to like really mentally prepare to get ready for the day. I know, if I know a day is going to be a busy day, I wake up and I'm like, the moment I open my eyes, like I'm like, ooh, here we go. Got to get ready to make these trades because it can definitely get you going. Giancarlo, I feel like I get insanely greedy with some of my trades if I'm up 5 to 10%. I don't really see that as good, so I don't lock that in and continue to stop until the price target. What do you recommend? So, all right, me personally, I think there's nothing wrong with taking 10% on a trade. Many people disagree with that. They're like, oh, well, the S&P 500 does this a year, so you need more than that. That's a flawed, fraudulent logic, right? That is just that's a horrible logic. Because if you are up 10% on a trade, would you rather take that 10%? Or would you rather get stopped out at 20%? Which one? Because not every trade is going to run 20% that you take. That's a fact. 10 to 20% is a fantastic wheelhouse, and it will get you in the groove of staying consistently profitable, especially when you're day trading. Sure, do you want to take every trade for 10%? No. You want to make 20, 25% gains, 30, 40, 50% gains. But if you don't think that 10% is good enough, 5% is iffy, right? You do want to let it go a little bit more than 5%. But, if you're not satisfied at 10 to 20% gains for a day trade, then that's something that you need to work on and that you need to identify, especially depending on the kind of trade you're taking. I would rather take 5% gains than take a 20% loss. I think Logan would too.
Green is better than red.
Yes. You're not going to be able to take every trade and make 20%. That is impossible.
Yeah.
Completely impossible.
Yeah. I think that answer comes down to market context, which we talk about a lot. If the market is absolutely moving in your direction, yeah. I mean, me and Austin are not going to take 10% profits. If we see this trade is working out for us, we're going to take profits, whenever we see the chance. Right.
Yeah.
Probably start scaling off at 20% and then from there. But if you see the market's dangling around, not really giving us a true direction, and you're up 10% and you say, okay, this totally makes sense if price comes back down, if you're in a call and it could possibly stop me out, then I would definitely scale out at 10% or maybe even take the full position. So market context is definitely a factor there.
You could always re-enter. It's not like the opportunity.
You could always re-enter.
Yeah. It's like there'll always be another opportunity. So.
There's always another trade. There's always another
There's
trade.
always another trade. That's absolutely right.
How do you resist the urge to trade as it sometimes comes really hard? If you have an urge to trade and there's no reason, like there's not a really good trade in front of you, I would genuinely get up and walk away.
Trading. Yep. And many people go, that's a very popular emotion that people go through here, especially in this server, right? Like anybody who's new coming to invest, right? Especially with us, they join Monday morning. They're like, where are the plays at? What's going on? Where are they at? It's like, well, our analysts are actively scanning the market and they're waiting for an opportunity. You never want to take a trade for no reason because that's how you lose money. That's just a ridiculous reason to trade. Yeah. So if you see a day where Logan doesn't take a trade, that's not because Logan's lazy. Logan was probably working harder that day than he does most days, right? Because he's like looking all day for an opportunity, and if he does not find one, he simply will not take it, right? And that's just a day that you go without trading. And I don't know how many, right? I don't know if you guys are aware, but some of the best traders on the planet have many days where they'll go weeks without taking a trade, right? That's kind of extreme, but you get the idea.
Yeah, I mean, that makes me think of the quote that I said in chat the other day from Jesse Livermore. There's times to trade and there's times to go fishing. And if you're feeling like forcing a trade, it's time to go fishing.
And if you guys don't know who Jesse Livermore is, he is one of the most successful traders of the 20th century. And he invented a lot of really neat patterns, or recognized a lot of really neat patterns in the market. You should definitely do your research on Jesse Livermore.
Definitely.
Very interesting individual.
A pioneer. He was the first, like, I don't even know how you can state how large his success was.
He made tens of millions of dollars in the early 1900s.
Yeah, he amassed more than $100 million, which, adjusting for inflation and how our currency is
like a billionaire.
now.
Yeah,
it's $1.5 billion in 1929, which is not an easy feat by any means.
In 1929 was actually when the Great Depression started, if you guys are not aware.
You guys literally just answered my next question of saying, so if you guys are both looking through your scanners or whatever else, watching the whole market, and you see like a really choppy day, it's a good thing. Like, how do you guys take a step back? Like, what is your thought process on taking a step back?
Well, I'm usually talking with Logan, and I'm usually discussing with him while we're watching the market, and we usually come to a conclusion pretty quick if the market is shit, and if there's a lack of opportunity. And so from there, I'll go grab a coffee, do other work that I need to do, just taking a step back in any way I can, because the longer I just sit there and stare at the chart, it's going to make me, anxious to take a trade, and that's not what you want.
Yeah, walking away is a huge part of trading, honestly, sometimes. If you see the market is not conducive to trading, brings back into force trading. If you see the market is not great to trade in, but you still sit there and force a trade, you're probably going to lose.
Yep, that is true. Rock P, yes, we are full-time traders. Yep.
And full-time helping you guys here.
Yep. I'm a full-time market participant. I got my my citizenship in the market. That's where I reside. Unfortunately.
I think fortunately I love my job.
No. It's fun. It's fun. It's an interesting way to live, though.
Yeah.
Trading the market. It's very, very interesting.
Yeah. 21 and I got gray hairs. All right, it is 6 p.m. We are coming up on an hour here, so if any
Logan,
questions come in.
You're a silver fox.
I am, bro.
What are you going to be like when you're 50? Are you going to be grayed out? Are you literally going to be Logan Silver?
It depends how Nano goes, bro. No, I'm kidding.
Okay.
I'm kidding.
I just quit my job now. I'm a full-time trader. Oh, congratulations!
That's awesome.
Well, I wish you the best of success in your endeavors.
Absolutely.
Hope it goes well.
We're here to help you with anything we can if you need it.
Now I'm going to be calling Logan a silver fox.
I don't know if I like that.
He's great. He has gray hairs, man.
All right, guys. Any last-minute questions here?
Yeah. There he is.
We're going to stop the stream here. We appreciate everybody coming in. If you did view the stream, we greatly appreciate your time. We greatly appreciate your attention. Have a fantastic rest of your weekend. We will catch you on